And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, and welcome to the Market Recap. Still Tuesday, April the 12th. I'm John Hogan. Thanks for trusting me with your time. Hopefully you had a good trading day today. Certainly had some good opportunities. A couple of things that I'm going to kind of point out that maybe some of us missed, maybe overlooked a little bit, but might have really helped us so far this week. Some information from last week in the S&Ps. We're going to take a look at that shortly in the charts. Today, it's opening day for the Chicago White Sox. My son's at the game starting right now. What are you doing watching me? You should be watching the White Sox. Thanks for everybody who joined me today for Make Hogue Money. We managed to make a little bit of profit today. The opening today in the S&Ps and in the equities wasn't particularly gratifying, but we did manage to squeak a little bit of money out of the market. So thank you all that attended, and thanks for all that participated. Having a blast with that. Looking forward to doing it again on Thursday. As far as the news today, inflation data was digested negatively, although there were some technical things in the markets that could have led us to believe that the markets were going to take away much of those losses from today. We ended up with some very small losses in the equities today when we did end up opening considerably higher after those CPI numbers. The Fed's Brainerd is saying, or has said today, that getting inflation down is our most important task. So you get an idea of where the Fed's ideas are, where their eyes are, just trying to get some of that inflation down. Wasn't it supposed to be transitory? The EIA has announced higher gas prices may limit summertime demand. Do you think, the genius statement, the U.S. output up to 820,000 barrels per day in 2022 versus what they were forecasting at 850,000 barrels per day? So a little bit lower production that they were looking for. Don't forget, tomorrow we've got the PPI final demand and the EIA petroleum status report. Tough trade today. When you do have a tough trading day, if you miss something, you're thinking you missed something, always look to the left. We're going to do a little bit of that today in the S&Ps. What are you doing, dog? Oh, Lacey's got her ball as she's like chewing on it, and it lets air out. It doesn't squeak. We can't have any squeaky balls here, but it does let some air out. As far as the markets today, downside exhaustion hits as crude pops back above that triangle T line, mostly in the overnight session. But our overnight longs continue to get paid throughout the day today. That doesn't happen all that often. ES and the Nasdaq, higher volume and open interest continues some of that downside structure. Maybe some of this weakness we're having this week is perhaps maybe some tax liquidation, people getting ready to pay their taxes, need some cash. It's always a thought. We did have late spikes to the downside that we opened above today, and they ended up failing as support by the end of the day. Again, we're going to look left and think, okay, what might have we noticed, or what might we have missed that could have told us that the downside risk was great this week? Not that it's been a bad week to the downside. We've got some downside movement. We're settling below weekly kickoff lows. I don't think we've seen anything just yet. Who knows? As usual, anything can happen. Gold is accepting of higher pricing in volume and time You have to see about the open interest tomorrow. The euro strong dollar brings potential downside continuation. The low, I think, matched exactly the March 7th low in the euro today. It's kind of the last swing low before we continue this move to the downside, if that's what we're going to do. Pullback in rates brings a relief rally in the treasuries. Mostly we're looking at the 10-year. We finally saw a little bit of a relief rally after some pretty serious downside movement. But of course, that's going to happen. We know rates are going higher. Pullbacks always give us an opportunity to sell strength when we are relatively confident that price is going to continue to move to the downside. Doesn't mean anything's going to be a winning trade. It's all in the timing and location. Natural gas upside structure remains. The auction seems healthy, although we did see a pretty severe pullback off the highs from the session today. Again, hopefully you have had a good trading day. These days where the market even opens higher and then closes with a small loss always exhaust me for some reason. The downside always seems much more tiring. Scott saw you and he conquered. First one in the room. Tachyon, hello. Thanks for your help today in the Make Hogue market, Make Hogue money. And thank you all for your participation and your attendance. Devont, good afternoon. All that bearish open interest yesterday and hollow rally pre-open kept me in a bearish state of mind today. Nice job, Devont. We're going to show you a couple other things that maybe have made you even more confident to the downside today. But I like to hear that. Laura, good afternoon. It's good to see you. Bill, Scott saw same. Didn't want to get chopped up early. Came back around 2 Eastern time and was able to make it back. Good job. Good afternoon. Wow, some down day. It seems like a big down day today. The losses were minimal compared to settlement price, but it does look that way on the charts. Beautiful day in the trading hood. Nicholas, good. Glad you had a good day. What a fantastic trading day. Tale of two sessions within one. Morning versus afternoon. There's lots of different stories throughout the trading day, isn't there, Dan? Beautiful trading session. Last night's Globex lows were very, very strong, leading to Europe session's strength, rallying into CPI. CPI blew out stops. A regular trading hour open led to inventory correction and a classic V rally. Good afternoon, Nicholas. Afternoon, different story. Opening range breakdown followed by a slow motion drip to grab as many trailing stops from the European session as possible. Every day is a new narrative. I love it. And every day is a new page in a chapter of the week that is our yearly book in trading. Sox versus my Milwaukee Brewers. Brewers fans. When I worked in Chicago, I'm guessing you care not about them Cubs. It kind of upsets my son that I like both. I'm a Chicago guy, but, in Chicago, you're supposed to like one or the other, and my son is a huge Sox fan, so I can't let him know that I do like the Cubs, too. I don't know if that's a cool thing, but it's just the way it is. When I worked in Chicago, my coworkers would all battle over the Packers versus the Bears. We've got a big Packers fan here. If you know Fred Decker, he's a huge Packer fan, although he lives in Chicago. I can't figure that out. Brewers versus Cubs. But the number one thing we all got along with was the Blackhawks, since we don't have an NHL team here. Blackhawks. Yeah, Blackhawks. I'd love to see them get back into some competitive hockey next year. We rip up so fast, it's hard to short it all. And then it lulls you to sleep on longs until you stop. Got to trade smaller than you can to survive. No doubt about that, Dan. Very wise words there. I've just found out that the Bears used to trade at Wrigley when I was born. Late 60s, I think, early 70s, they played at Wrigley. So a little bit of a short end zone. How'd you do today on MHM? We made a little bit of money. We had a loss. We had a stop that usurped our... We had a win that usurped our loss. I think we had 2, maybe 3 trades everybody's looking in pretty short context, short time frame, which in the time we have for make whole money makes sense. But I'm just glad that we were able to take another step towards trading that in a funded account, because that's what's going to do. That's what we're going to do if we succeed in that account. We got to make $9,000. We're about 9/10 of the way there, and then we're going to go live. Burrell Investments, no trades today for me. That's all right. Must be a September 9th thing. There you go. A 9/9 thing. Nicholas, is that your birthday too? Good afternoon, Frederico. Why don't we go ahead and jump into the charts here and see what transpired. I think I got a couple of cool things to tell you that I probably should have told you earlier. But let's take a look. Nicholas, birthday buddy. My daughter was born on September 9th too, so we got another birthday buddy. My little daughter, who's not so little anymore. She's 22, 23, 24. Oh my goodness, time flies. Here's the S&Ps. All right. So we had an increase in volume and open interest on the downside on a test of weekly kickoff low. We opened it well above that weekly kickoff low with some overnight inventory to the long side. A lot of that came from the CPI numbers, which actually wasn't all that favorable. Not all that favorable. That's what I was thinking this morning. Although the initial knee-jerk reaction was to the upside. Who am I to tell anybody what's right, what's wrong? So here's the 30-minute chart. So we have our big knee-jerk to the upside. We range. We failed to close the gap. We range. We just grind higher throughout the rest of the day. And we end up with a small loss on the day. It seems like a much bigger loss than it was, but we now have a second close down below 44.10 after closing one point below it yesterday. We've got a little bit more time down below here. The thing that I wanted to show you that we should have been talking about from the beginning of the week was the fact that we had some very weak lows the end of last week. This low and this low are exact. Okay, that's not necessarily a strong low. It may mean that the market got too short there a couple of times, but the exactness of that says it's short time frame traders jumping in to buy there, not longer time frame traders. Friday's low was a poor low. If we look at this on the TPO chart, here's that even low. Looks like a double bottom, and a lot of folks like the fact that, hey, that's a double bottom. We're going to go higher. Well, we did the next day, but we also ended up with a weak low on the next session. We've got nothing but excess on the highs here, and 3 weak lows in a row. That should have told us, what? There's something going on here. It's not long time frame buyers here. It's short time frame buyers getting too short and just kind of bringing the market lower. So this kind of gives an aura of weakness. Yesterday we opened, we rallied, couldn't close the gap. We ended up breaking and bringing in a late spike. Today we open above the late spike, which should be acceptance of higher pricing, which was true the better part of the day. But again, we have a failure to communicate. No, we have a failure to close the gap here, which ended up being one of the more important nuances of the session today in the Nasdaq and in the S&Ps. The Nasdaq doesn't show this. S&Ps do, but the S&Ps are the broadest of the indices. And sometimes this is really helpful and important information. So we've got a push to the downside. A double distribution trend day is what we've established today. No late spike. Our late spike today failed. The base of the late spike did provide a degree of support, but not for long. Not for long. Once we took that out, it was pretty much all bets to the downside. take a look at crude oil. This morning we had a look at the opening range, which did look to the downside first and did not find any business down there. So it continued to the upside. Here's the daily chart. A little bit of an improvement in volume. Don't forget, we're coming into rollover. So I'm kind of thinking we may start to fall into some sort of range here. It didn't happen for us today. Our overnight longs just continued to get paid throughout the session. Overnight longs, overnight session, moving higher all day. The market opens, looks below the opening range, does not scare our overnight longs, and buyers come in and continue this market to the upside. Where do we close today? Well, we closed back above $100. I don't think anybody's real happy about that. We've got the API at 3:30. We've got EIA tomorrow at 9:30 to see if we can get some more information about supply. Demand, we'll have to see. The Nasdaq. All righty, the Nasdaq. Lots of folks talking about the fact that rates being higher has a lot of folks selling tech stocks, and it certainly looks that way. We had a decent move back up, at least towards that weekly kickoff low, 14,264. We went 20 points above it, but we didn't find anything up there. We didn't take out. There was lots of opportunities up there to take this short trade. We didn't have the same information as far as open interest is concerned, but technically, head and shoulders, a deep close below the weekly kickoff low. There was information here telling us, you know what, maybe this thing isn't doing all that well. Here's our trading day today. Let me put the profile on here. Thought I had it on here already. So here we go. Look at how beautiful this market failed at weekly kickoff high. Yes, the overnight high was 10, 20 points above it. Our regular trading hours session, let's see here. The high 14,277. So 12 points through it, just enough to take out most of the stops. Unable to trade above yesterday's high. Unable to trade to close the gap from Friday. Here's that double bottom in the S&Ps here and here. Didn't happen. Almost a double bottom here. Kind of a weak low here for the week and continuation to the downside. There's so much information coming at us on a daily basis in these markets. To miss something is not a sin. Just if you feel as though you missed something, always look to the left. Always look to the left. I noticed the weak lows we had last week, and I kind of discounted them as, all right, that I don't know if that really matters because we're down below it, but it does. Everything you notice can make a difference in your trading day. Let's take a look at gold real quick. Okay, we had an increase in open interest. We have the market one time framing higher, 1, 2, 3, 4 days in a row. We see volume doing okay, not killing it. Open interest again, an additional 1,600 yesterday. Take a look at the 30 and see how today went. We had a pretty decent push to the upside that did not necessarily hold all that well. We had the market open above weekly kickoff high of 1958. Okay, we had settlement was all the way down here, if you remember. Our overnight inventory, however, there was no real major overnight inventory. You got to remember the market opens at 5 p.m. and it opened here. By the time the regular trading hour opened, it was up here, but this was partially that opening range. the CPI numbers. So they pushed us higher. We've got overlapping to higher range. We've got outright higher value. If we added a bunch of open interest, that's going to lead me to believe that this auction to the upside is still relatively healthy. So make sure you're checking open interest on a daily basis. My phone's ringing. It's somebody I don't know keeps trying to call me. His name is Scam Likely. I don't know Scam Likely. Here's the euro. So we see more continuation of the downside. We were looking at this as a potential area of balance. That potential area of balance appears to have broken for us today, indicating potential continuation to the downside. Here's the close. So our settlement's going to be right around here, 108.52. The black lines are weekly kickoff levels. The purple lines are weekly highs and lows from last week. So we've got a ways to go before we get to our weekly kickoff low in the euro. One of the things we're looking at, however, though, on this daily chart was, what was the low on the 7th? The low was 0845 half, 0845 half, 0545 half. So we did put in a lower low, not necessarily providing a weak low there. Casey, the weekly kickoff high and low are areas in technical analysis, market profile, math, candlestick patterns. These are levels that I believe we are going to force longer, stronger traders to be forced to adjust inventory. They're longer time frame levels that I formulate using a lot of different information, including tea leaves and a Ouija board. So sometimes they are really useful. We can see where they've been somewhat magnetic or somewhat repellent in many of these markets already this week, just not necessarily all that important for us in the euro, at least not so far this week. Kind of short time frame controlled. This move and continuation below that low here may bring some new business into the marketplace. All right, dead letter opener. Have a great day. Making breakfast, 6:22 a.m. Goodness. Okay, so these are not meant to be. These are not meant to be to envelop the weekly range at all. They're just more important levels that I'll be paying very sharp attention to as price gets to them. Okay. Now let's see the 10-year. Okay, we've been a long way in a short period of time. Been looking for this pullback. It took a Joe. The black lines here on these charts are the weekly kickoff levels. The purple lines are last week's range. Okay. So we've been looking for a little bit of a relief rally, and it took a little bit of break in rates for that to happen for us today. Here's the 30. Okay, here we go. These green lines are naked points of control that at one point were unrechecked. Here's one now. I'm going to turn this into a ray so that as the price comes back to it in the future, I'll know that it's rechecked, because a lot of these points of control are visuals that price comes to. Look at what we did today in the 10-year. We've been moving lower. We've been leaving unrechecked points of control all the way down. Today, we checked 2 of them. So these are visual levels. And when when traders are looking at a particular level, they're going to make price go there. We do not have any real good naked points of control here for quite some time. This would be quite the pullback for that to happen. And then we have last week's high. The blue lines, whoops. And there's last week's low. The blue lines here are settlement prices. Okay, so I like to put the settlement price on my chart so that I know where overnight inventory might be. Now, in the 10-year, we didn't really have any overnight inventory. The market opened, looked lower, came back to settlement before the number came out. The number came out, we rallied, we took out this naked point of control, we put in a high, we couldn't take out that point of control. All we did after this move to the upside was find an area of balance with which to wait for the next information. So here's our weekly kickoff low. Take a look at the nat gas. Okay. Whoops. Dag nabbit. I keep doing that. 575. This is going to be close enough for rock and roll. Again, weekly kickoff low, weekly kickoff high. We didn't close above the weekly kickoff high last week, so I have to leave it there. It's a level where, again, I'm looking for longer time frame traders to enter the marketplace one way or the other. Yesterday, we're going to see on the 30-minute, did they enter the marketplace there or above it? It appears that they did. We have an increase of 8,500 in open interest yesterday alone on a little bit lower volume, but the way the market is acting, the way the momentum is acting, and if we lost open interest yesterday, I'd be a little bit more concerned that the volume was falling off and open interest would be falling off. We'd be looking at more of a potential for a pullback on this. Okay, so this weekly kickoff high, 646, we left from last week because, again, we never did close above it. We closed above it yesterday. Our next weekly kickoff high is quite simply put 73.60. It's a swing high from all the way back on November of 2008. We're looking 14 years ago to find reference levels for price in natural gas. Take a look at the 30-minute. So that's not our 30-minute. Here it is. So the weekly kickoff high last week, you can see, there was some attempts to get to it, to close above it. They didn't happen. But what ends up happening is we end up exhausting the sellers above that level and then turning them buyers once the market turns. Yesterday, we opened below it. We didn't spend a lot of time there. We drove the market higher, and then we closed the market on the high, and we added a bunch of open interest. So that tells me there's a pretty good chance that this level, which was resistant the week before, is now supportive. So we start to go from looking for opportunities to sell strength to opportunities to buy weakness up above this level, which has us kind of looking at the right direction here. Now, today, we have range bound, but overlapping higher range, overlapping to higher value. If we added open interest on today, tomorrow morning, we'll get to see that. Then the upside auction looks to be continuing at least relatively healthy. Here's the nat gas daily. What did we do as far as volume is concerned? We had an increase in volume on a day that is overlapping to higher in range and value. This market is still attempting to go higher. We got to ask ourselves, how good of a job is it doing? Today, it did a pretty good job as far as volume is concerned. But if we lost a bunch of open interest, maybe we took a little bit of profits on this day. Doesn't mean that the market is ready to turn around and head lower. But the volume on this up move today seems to be attracting more eyes to it, more interest. If we added open interest, the upside auction remains healthy. So just some thoughts there and some really good, important questions. I appreciate you guys asking. So, boy, this has been a long recap, and I apologize. I don't like to yammer on too much here. Any other questions? Weekly kickoff, highs, lows, any of the other things on those charts. We did go back and we looked at the S&Ps. The poor lows from Wednesday and Thursday and Friday should have been a little bit of a tell that the market is more likely heading lower. Take a look at what happened on this day. Today is the beginning of the Civil War, April 12th, 1861. Very bad period of time, but for a good reason. 1954, Bill Haley and the Comets recorded "Rock Around the Clock" today. 1981, the Space Shuttle Columbia is launched for the first time. I remember seeing that. I was in high school. I'm dating myself. Today's the day Franklin Delano Roosevelt died after 4 momentous terms in office as the president. Today, 1945, FDR dies. And in music, today's Tiny Tim's birthday, 1933. Anybody remember Tiny Tim? Then you're probably as old as I am, or older. In a song, "Tiptoe Through the Tulips," you saw him on the Johnny Carson Tonight Show. 1940, great musician, Herbie Hancock's birthday today. Johnny Kay from Steppenwolf, it's his birthday today. 1967 on this day, Mick Jagger was punched in the face by an airport official during a row at an airport in France. Jagger lost his temper after the Rolling Stones were being searched for drugs, which resulted in their missing of their flight. What are the odds? 1950, today is David Cassidy's birthday. Famous from the Partridge Family. 1969, the Fifth Dimension had started a 6-week run at #1 on the U.S. singles chart with Aquarius, "Let the Sun Shine In." What a great hippie song. Today's Vince Gill's birthday, 1957. There was something else here. 2016, a U.S. court ruled that Led Zeppelin founders Robert Plant and Jimmy Page must face trial in a copyright row over the song "Stairway to Heaven." There was a guitarist in the band Spirit, Michael Skidmore, said that the melody was his. They played together on stage in the 1960s and felt as though "Stairway to Heaven" was stolen. I don't know the outcome of that, but all right. Yes, applicable to traders, the song Kenny Rogers, "The Gambler." You got to know when to hold them, know when to fold them. Joe, where do I go to find open interest? Let me show you. Let me get things set up here, and we'll go and so what I want you to do is go to this website. Here it is. Good night, Scott saw and he conquered. Glimmer Sandwich, good to see you today. Thank you for everything. Know when to walk away and know when to run. When? You're welcome. Oh, hello. I'm using the wrong mouse. What is going on here? Copy. Tachyon piece. Paste. Okay, here's the link. Now I'm going to show you the page. Okay, so this is the CME's daily bulletin. If I want to go and let's say check crude oil and look at the open interest, I'm going to click energy futures products and another page is going to open up and it's going to look like this. First thing in the morning, it's going to say, what does it say? Preliminary. It's probably going to be wrong. The only thing that's going to be wrong is the open interest, which is kind of sad because that's why we're looking at this first thing in the morning. But it will be relatively accurate. After about 9 o'clock, if you reload the page, it'll come up final. Now I'm going to make this big. So what we have is yesterday's settlement price. We have total volume for the front month, total open interest for the front month, and the open interest change for the front month. Remember, we're coming into rollover. If we only focus on the front month, we're going to lose some of the information. Okay, we lost 33,000 in open interest in the front month, but we added 15 on the next month. We added 2,500 on the next month. We added and lost all the way down. So when I'm collecting information about open interest, I'm looking at the total. I'm looking at the total volume, total open interest, and total net change of open interest during the session, especially in a product as deep as crude oil. Look at the contract months and how much open interest is. Here's December of 2023. We have over 100,000 in open interest. This can affect the total open interest. Here we are all the way out to December of 2026. We already got 8,400 in open interest. So with all of these contract months affecting open interest, I'd focus on the total. Okay, look at the equities. We're on the final. Make this big so we can all see it. Yesterday's settlement price, $1 below 44.10 weekly kickoff low. Total volume. Does it make that much of a difference? There's only 1,745 in the September contract, 11 in the coming December contract. Maybe not. Open interest. We added 25,700 in the front month. We added 475. Is it that important at this time to focus on the total? Maybe not. When we come into rollover, that's when it becomes more important to check the total number of open interest and volume instead of just focusing on the front month. So I focus on the total. The total. 9 a.m. Central, yes. And it's not finite, Joe. Sometimes it takes them longer. That's how complicated open interest really is. I know that there are platforms that claim to be able to calculate open interest on the fly, but it's just not true. They can't do that. It takes the exchange extra time every day to come up with the total number of outstanding contracts, and that's what open interest is, of course. I buy one from you, Joe. It's a new position for me and a new position for you. We've just created a contract. I sell mine to somebody who's assuming that. It doesn't change the number of contracts. You get out of yours with somebody who's getting out of the other side. It dissolves one contract. It's complicated to the point where even it takes extra time for the exchange to really decipher how many open contracts there are at the end of a given trading day. So again, that's why we start with the preliminary, and then we end up refreshing and getting to the final. Okay? If you have any more questions about that, Joe, don't hesitate to ask. I get more time on the recaps, but definitely come to group coaching, which is tomorrow. Tomorrow's Wednesday, right? We got group coaching. I think this is the right link. And you've probably been there before, but here's the link for group coaching. More questions, let me know. All right, Joe? All right, it's been a long recap. I apologize. I don't want to keep everybody. I know we've got things to do today. And we're looking forward to seeing everybody tomorrow morning for the market forecast. And again, for group coaching tomorrow. Tomorrow is Wednesday. We have no recap tomorrow. We're going to have the question and answer session with Michael Patak, the founder of Top Step. We're looking forward to seeing everybody there. But as for me, I'll see you tomorrow morning, 7:45 sharp. Every morning, same bad time, same bad channel. Have a good night. Get some rest. Be kind to yourself. Be kind to others. Continue praying for peace, please.